Hello and welcome to myfinanceteacher.org. It's time to have a look at cryptocurrencies as they have corrected over the last couple of weeks or so. And the correction has actually been pretty close to our expectations. This black line over here represented our expectations starting over here in the very early November. Bitcoin came close enough to that black line, corrected. And if the cycle low has actually been reached yesterday on Bitcoin, that would be a cycle lasting for 59 days. That's pretty close to an average. The average duration is around a couple of months. Over the last several years, Bitcoin has been relatively consistent with giving us cycles lasting somewhere around a couple of months. Of course, sometimes they're a bit shorter, sometimes they're a bit longer, but an average has been a couple of months. So there is a pretty good chance that we started a new cycle yesterday, meaning that perhaps there will be a bit of a rally going into the next several weeks. I would, however, give this scenario of a continued rally for another few weeks, perhaps only 35% chance. I think there is 65% chance of several more days of downward momentum in cryptocurrencies, in Bitcoin particularly. And I would like to see Bitcoin retest the previous cycle high, that's somewhere around $53,000 before a bounce into a new cycle. That would give us a more sizable correction all the way down to 50% Fibonacci retracement and even slightly lower than that down to that previous cycle high. With such a correction retracing 50% or more of the recent rally, perhaps an entry into a long position could be a little bit safer. So let's change these black lines a little bit, perhaps a continuation down over the next several days, down to the 50% Fibonacci retracement, perhaps down to the previous cycle low, around $53,000. That could extend the cycle, giving us a cycle lasting for maybe a week over a couple of months, which is still pretty close to an average duration. That's why I would be looking forward to take sizable long positions. Although again, nobody knows the future, we're just looking at a range of indicators here to see where the turn in the momentum might happen. And with a 35% chance scenario that cycle low has been reached yesterday, perhaps a 20% tranche, 20% kind of a gradual build-up of your positions could also be a relatively good idea. Let's have a quick look at Ethereum. Relatively similar thing happening. The black line kind of came pretty close to what Ethereum actually did, correcting down into its cycle low. Looking back, Ethereum has actually retraced the previous cycle high. So perhaps I would say there is a 45% chance for Ethereum to start a new cycle right here, and only a 55% chance of continuing down a little bit more over the next several days to reach that 50% Fibonacci retracement as we are expecting on Bitcoin. That would bring the 14-day RSI down a little bit closer to oversold, which has generally been the usual levels for these cycle lows in Ethereum. Closer to oversold, not necessarily dipping into oversold area. Next, let's have a look at a couple of interesting indicators, such as Crypto Fear and Greed Index. So over the last 1 or 2 weeks, Crypto Fear and Greed Index came down all the way to around 34, and it might actually be enough for the cycle low. Although historically, it's quite common for this Crypto Fear and Greed Index to drop below 30 to give us a bit more fear, a bit more of this proverbial blood on the streets for the cycle low. But of course, during very strong bull markets, as in early 2021, when Bitcoin was pushing higher from under 20,000 all the way up to over 60,000, cycle lows might of course only retrace the sentiment down to this Crypto Fear and Greed Index of around 40 rather than 30. And are we in a strong bull market push right now? Perhaps, but again, a safer long position entry could be when this Crypto Fear and Greed Index drops below 30. While at the moment, in case the 35% chance scenario plays out, maybe a fifth of your regular long position on Bitcoin could be sort of a good idea. Let's have a look at this market depth ratio. That's the ratio of buy orders to sell orders on a range of cryptocurrency exchanges. Whenever this index is green, there are more buy orders rather than sell orders, which generally is likely to push the price higher. And whenever this indicator is red, there are more sell orders rather than buy orders, which generally might push the prices lower. As it happened over here, for example, in the second half of August, A lot of sell pressure, the market depth ratio is red, and what we see is a decline in Bitcoin price over the next couple of weeks after that. But of course, with the decline in price, we see a lot of buy pressure accumulating in the markets, which later pushes the price much higher. Now looking at what's happening right now, it looks like the buy pressure is only now starting to accumulate. So again, perhaps another few days of kind of a sideways to downward move in Bitcoin before the rally into the new cycle. So that's my view on Bitcoin. If you like the video, I would appreciate it if you hit that like button, and of course subscribe to the channel for more interesting content. And lastly, let me tell you a little bit about myfinancesteacher.org, which is a community of like-minded investors where I make regular updates on a range of markets, including precious metals, cryptocurrencies, stock market indices, energy, including uranium and fossil energy, as well as commodities such as copper, grains, and others. One of the interesting products in the community is the model portfolio, which is transparent, showing all of the history of my trades starting in July 2020. So that's complete transparency with the total gains without any leverage. So that's without taking too much risk, is around 55% between July 2020 and October 2021. With a 2x leverage, one perhaps could double the portfolio size in the same period. So if you want to see what's going on in the investment community, you are more than welcome to register.